hit the deck of CME Group for Traders Unplugged. Joining us now, Alan Knuckman and James Ramelli. Good morning, guys.
Good morning. Good morning.
Round number one, gone bananas. Is a tax inversion plan by Chiquita a sign of irrational exuberance in the stock market?
I think so. We're talking about bananas here. We're not talking about a tech company that makes anything. It's simply bananas, supply and demand. And I think it's a reflection of people expecting too much out of corporations and corporations trying too hard to perform.
I don't necessarily think so. I mean, we saw just how much the market beat down Walgreens when they announced that they weren't going to do an inversion. I think this is probably the right play for Chiquita. They are a very big company. Bananas is one of the most concentrated markets in the entire world. Even if people do decide to boycott them for changing their mailing address to avoid paying U.S. taxes, it doesn't really matter because there's nowhere else to get bananas.
It's nature's perfect food, but the whole idea of inversion, the corporate tax rate is listed at 35%, but nobody pays that. The rate for corporations, the S&P 500 corporations is 15%. So you have to dial down. It's got a big headline number, but nobody pays that.
Round number two, growing pains. Which of America's fastest growing companies is a good investment? Both AT&T and Starbucks happen to be on that list.
Right, so I actually like Starbucks better than the rest there. I think Starbucks has a lot of upside here. They haven't quite gotten as stretched as some of the other tech names on that list, so I think this is a good play. With markets nearing new all-time highs once again here, everyone's going to be looking for value, and I think that piling into tech names that have a much higher valuation that looks a little more stretched might be a little too risky here for me.
Starbucks could easily go to 90. We would trade between 70 and 80. A breakout above 80 sends it to 90. But the concern is, do they end up like Staples, where they grow too fast and have too many stores? That's not going to happen.
Round number three, the popular Ice Bucket Challenge is a reminder of the research work pharmaceutical companies do to get drugs onto the market. So what's your best pharma find?
Wow, it's a really tough sector because it's come a long, long way. Your risk reward is very skewed right now. IBB is the iShares that tracks the biotechnology fund. It's gone from 275 down to 210, back up to 265. So that target's a 25% move, but it's very, very hard to play things after they've had this extended move.
Right, absolutely. Just like Alan said, this thing has been bouncing around like a yo-yo here and has the potential of wiping out my account. However, as an options trader, I'm able to look at strategies using the options market that set up very well risk versus reward setups that are very well defined. That's not going to blow up my account in an adverse move against me. I think it's really the only way for a smart investor to play biotech.
Well, here's your bonus round question for this week. True or false? The NFL is asking potential Super Bowl halftime performers to pay to play.
True.
It is true, and they're going to take a percentage of their touring profits. So I don't know what the math is on that, but that's very interesting.
Bad trade.
It is true, according to the Wall Street Journal. Can you correctly guess how many viewers watch the Super Bowl?
65 million?
300 million.
Well, according to the report, it's 100 million. Thank you for being on the show. First Business continues right after this.